Tenured Professor of Economics from the University of Maryland, the man with the bow tie, Peter Morici, is joining us now. Can you give me the big reason why the Dow Industrials are off on a tear like this?
Well, capital has become very cheap. It's been made very abundant, not just by central bank policies, but by changes in the economy. You know, businesses can create a lot more value with these intellectual property investments than they ever did in the old days with the same amount of money with brick and mortar and machines. You know, you were just talking about Amazon. Well, Amazon was created with not a lot of capital. The same thing goes for Google as compared to, say, the creation of the Ford Motor Company. If you have a lot of capital around, it drives down its price, and that basically means high, price to earnings ratios, high stock prices. I think we got a lot further to go. I think we could easily justify the market at about a third higher than it finished yesterday. It's not going to happen overnight, but it can happen.
Well, wait a second. I'm trying to do the math. We have a lot of math on this program. If it's a third higher, that means it goes up to about 24,000. That's what you're saying?
Yeah, I did it for the S&P, and it's about 2,800 for the S&P. That's perfectly feasible. I mean, it's not going to happen tomorrow. Right. It's not going to happen by the end of the year, but that's how much room there is. If you look at the price-earnings ratio over the last 25 years, it's about 24.9. And right now we're operating just a little bit lower than that, and we probably could justify a price-earnings ratio of even higher.
So we're a safe haven in a tumultuous world. We are a safe haven. Bring your dollars, bring your money to America, and we'll take good care of it. Safe haven. Plus, plus the world is awash with money created by central banks. That's all true?
It's awash with money, but also businesses are using it much more efficiently in this digital age. It takes much less money to create a new product or a lot of value than it did 50 years ago. So we don't need as much capital as we once did, which means it's just cheap.
Does the